Market Chameleons, and my favorite chameleon, Dimitri Pargamonic. How you doing, Dima?
Good morning, Will. How are you?
Awesome. So we'll do another Q&A day today. What do you think?
Yep, I think so.
All right, let's get started with a disclaimer.
Okay, so before we get started, everyone, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer.
Excellent. So I put the link out into the YouTube chat to the Zoom. I was good enough to turn on the Zoom meeting today. So anyone who comes over will get into the queue. Just raise your hand and let us know if you have a question.
Yep. Yeah. So the idea is today, any questions you guys have, there are two ways to ask the question. One is to put them in that live chat. Will's going to be monitoring it and reading them back to me. But the best way to do it is if you have a question, you could click on that link that we'll created. That will take you over to Zoom. Raise your hand. This way we can put you on live. You don't have to turn on your video camera, but at least we'll hear the question. And really, that's probably the best way, considering that, trading and options, there's a lot of variables, a lot of factors going in there, and you might want to share your experience or something you see, and that's going to be to the benefit of the entire community. And it kind of opens up a discussion, and maybe you could even walk us through something that you're looking at, because when this way we all could get a visual there and get a better sense of what you're looking at. And I think that the Q&A in general has been good because, people have been bringing up different experiences or things that they've run into sometimes that they didn't expect, or certain setups that they're looking at. One thing you guys, just keep in mind, people are trying to learn here. So if you're just trying to look for, a new filter or feature request or something like that, you could just email it to us. And not that I dismiss it, because I know people who ask for filters and features, they're big fans of Market Chameleon. And the reason they're asking is because they want to be able to do everything on the platform. And we appreciate that. But, you could just email that to support. This way we kind of just focus the half hour on, something maybe, relevant to currently going on in the market, or something in the options that you may have seen that you weren't expecting. And it could be, you could ask questions about the tools, about something you've seen in the data or analytics, or just a general question about trading that you've experienced. So no problem. What we'll do is, I know there's a little bit of a delay. So while the questions are being queued up, I'll start going over what's going on in pre-market report today, what's trading in pre-market. And I'll also just kind of fall back to any questions that I've had from before, until we see some of those questions coming in.
Okay. Yeah, and remember, I just saw Jean popped in. She was nice enough to remind us all that you can vote once a day for Mark Chameleon if you want, for the Benzinga FinTech Award. I put that link in as well.
Yeah, so that's pretty cool. So so how does that work? We're up for a Benzinga Award with like a couple other.
It's top. I think it's a top FinTech research tool.
Cool. Yeah. So if you get your votes, definitely we appreciate it. I think that would be pretty cool if we get that award. But let's move on. So let's just start out right now with the pre-market report. And these are stocks that are trading in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. Coming down here, looking at how many made the percentage gainers list. I see 48 stocks on a percentage gainers list, 50 on a percentage decliners list. So, that's pretty even. It's a mixed bag. So I think there's no real bias at the open here, positive or negative. I'm going to use this market cap filter to see what's going on in the higher market cap stocks. So using the market cap filter of stocks 20 billion market cap or higher. Let me just refresh my screen here. So let's do market cap 20 billion or higher. And I got 6 on the percentage gainers list, 14 on the percentage decliners list. So not a huge list, not a lot of stocks on there, but nevertheless, a little bit, favored towards the bearish buy side at the open. But again, the lists are very, very small. Looks like Disney reported earnings yesterday. So I see them up 4.6% on 346,000 shares. So that was on an earnings. I'm not seeing really big volumes anywhere here. It looks like a couple earnings over here. So let me know if you have any questions right now, Will. I'm not sure if we gave it enough time. I think there was
no one showing up in the chat as of now. So anyone who does have a question, just click over to the link. I'll put it again in the chat. There is a lot of chatting, so the link is at the top, but I'll put it again in. Just come on over and let me know by raising your hand, or just say something in the chat that you're ready to ask your question live if you so desire. We'd love to hear from you.
Right.
No questions yet though, D.
Okay. So a couple questions that I get, and I've kind of even covered them over in the past, but I know there were like new people coming in sometimes, so I get some questions that reappear. And one of them is, well, why is the implied volatility level on your platform different than my broker? So this is like a common question people give, because they'll come into, like here's a 30-day IB 11.2. And I'm going to come really quickly to the options chain and explain this. So when we're talking about an implied volatility, okay, it's not the same thing as a stock, because I think people are looking at like, well, this is the stock price here. I should see the same stock price on my broker. But implied volatility, it's a derived value, and it's a benchmark. Okay, so it's how you're calculating a benchmark. So stock itself does not have an implied value, right? So SPY does not have an implied value. Implied value comes from option prices. Okay, they're coming from the option prices, and based on what the option prices are, we have to determine what we think the implied value is. But here's the problem, there's no one option, right? So SPY has a lot of different options. There's, different expirations. And if you click on an expiration, then you have the calls, the puts, and the option prices have bids and offers, right? So the bid has an implied volatility, but the offer is a different price, has an implied volatility. So when we look at the option, when we look at implied volatility, first we have to determine, well, what are we referencing here? What options are we referencing as far as implied volatility goes? So the standard kind of benchmark, it's kind of like the VIX, is what is a 30-day constant maturity, right? So what is a 30-day option implied volatility? But here's another issue. We don't see a 30-day option every day, right? So even if today, this particular option, let's just say I'm going to August 30th, 12 business days to go, here's this option. Well, tomorrow or Monday, it's going to have 11 business days, and the next day it's 10 business days. So it's not constant, right? The options will expire. So we have to figure out a way to create a synthetic 30-day option. So then you go in there and you say, well, based on 2 months that straddle 30 days, you take a weighted average. You have to select which strikes you want to use. Do you use just at the money? Do you use the options surrounding that, the money? How much weight do you give to each option, right? How much weight do you give to this, to this, to this, to this, right? You take a weighted average. Then how do you treat options that have a very wide market? Do you put a placeholder? Do you skip it? How do you treat the decay, right? So there's an option pricing model. Well, there's 12 days to go. But in the middle of the day, it'll really be like 11 and a half days to go. So how are you decaying these options? Linearly, or are you decaying it by hour? How are you treating, what are your estimates for interest rates, for dividends? So there's so many different factors to calculate the implied volatility that there's absolutely no way, unless everybody is using the exact same methodology and taking the snapshot of these options at exactly the same time with, there's no way that you're going to get what a person doing it a different methodology is getting. All right. So we don't even know, when somebody at your platform says SPY implied volatility is 20. Okay, well, what is the methodology you're using? Like what days to expiration are you referencing? How are you, and by the way, if you go to the VIX, the VIX will show you a methodology. They'll tell you how they treat, options with no bid. They'll tell you how do they treat options that are way out of the money. They'll tell you how do they treat, wide markets. It's a methodology. So what we do is we stay with our methodology, the best from our experience, of things that we've seen exceptions, how we decay, everything, how we treat half days, holidays, wide markets. We've already developed a methodology for that, and we're consistent. So this way, when we're looking at an 11 volatility, let's say in a 30-day IV and SPY, and we take a look back, what was it yesterday or a month ago or historical, we're using the same methodology so we could see, if it's going up or down, or what is the ranking based on historicals. Okay. But that, I just wanted to bring that up because I get that question. Well, I'm seeing 11.2 here, but my broker says 10.9. Okay. There's like a million different factors that could have gone into that. So just wanted to kind of answer that question really quickly. Got another, here's a comment I just received. I don't want to learn how to fish. I just want to fish, right? So we'll get comments like that.
Well, that's biblical.
Yeah, that's biblical. So, and I think that there's a misunderstanding, like when you're looking at, as a trader, right? And you're using a research platform. As a trader, you have to learn. There's no other way. You have to learn from experience, from, education, from research, or you're not a trader. Okay. So think of it this way. You can't be a fisherman and say, I don't want to learn how to fish, because then you're not a fisherman. You maybe want to be a consumer of something, but you're not a fisherman. And you can't go buy a rod, look at the rod and say, give me fish. You have to learn how to use it to catch fish, right? The rod's not going to, it's not going to magically pop it out for you. If that's not what if you don't want to learn, if you don't want to, then this isn't for you. You could just, you could take two things. You could just go and gamble and try to get lucky, or you could try to get a hedge fund that will do it for you, and they'll, pay them 2 and 20. So they take 2% of management fee, 20% of the profits, so there are other alternatives there, but you can't buy a rod and tell the rod, I don't want to learn how to use you, or I don't want to learn how to fish. It doesn't work that way, So, and from every trade, when you do trades, it's a learning experience, right? It shouldn't be just like I took a shot and it didn't work out, or I did 5 trades and I lost 4, it doesn't work, or this doesn't work. You got to be learning, like, what was my thesis? What did I miss? What happened, from the time I did the trade to the time, I took it off. Like, what was the lesson? What was the feedback? Just like if you're playing chess and you try things and it didn't work, you're making adjustments for the future. And if you're not doing that, you're not trading. So it's important to kind of learn, you could read about other people's experiences. That's good. you could do research, you can do this. Ultimately, though, the most learning you're going to do is from your own experience. And it's costly, right? There's a cost to doing that, just like anything, right? There's a cost to it, but that's where you're going to learn the most is from your experiences. But as long as you know that I'm going in this, I'm doing this trade for a couple things, I think it's a good trade, but I want to learn how this works out, right? You've done all your research, everything, you created your thesis, it looks solid. At the end of the day, though, you're doing it because you still need to learn about the outcomes and the feedback loop.
So D, we do have a couple questions. Both have come in on the chat.
Okay.
And we have Shan is raising their hand in the
So
Zoom.
let's take, let's take the hand first.
All right. We're taking the hand on the Zoom. We're going live with Shan. All right. They're coming in.
Okay.
Hello,
Hey,
Shan.
Yeah, you're on mute. Okay.
Hi. Actually, I have a couple of things. First of all, I would like to know that in the iron condor screener, I don't see the delta or probability of profit stuff. So, is that something which is missing, or I can bring that field somewhere from somewhere?
Sorry, it was coming in, but I couldn't hear exactly. What was it? Was it
It's a iron condor, the screener, the short inner one, yeah, this one.
okay?
The delta.
And you don't see the data?
Delta.
The delta of the iron?
Delta, yeah, delta.
Delta of an iron condor. Okay, so the question is, you're on a screener and you're looking at an iron condor and you don't see the delta of the iron condor. Is that correct?
That's right.
Okay.
For the leg, yeah.
Okay. So when we talk, so the delta, okay, the delta of an option, just let's go over like first what the delta of an option. The delta of an option of a single option is telling you what the option is expected to change by for a dollar change in price. Okay. So if you have an option that's $1 with a 50 delta, that option, if the stock goes up by $1, it's expected to gain 50 cents. If it goes down by $1, it's expected to lose 50 cents. Now, when you do a combination of options, those deltas start to offset, right? So I could buy an option that has a 50 delta, and then I could do a call spread and sell an option that has a 25 delta. So my net delta is 25, okay? When we talk about iron condors are really not a delta strategy. It's really should be delta neutral. They shouldn't have a delta. Otherwise, if you're doing an iron condor, that means you will have a skew. So let's just take an apple here, right? We're selling an out of the money put spread, right? So you're selling the 148 put, buying the 143 put, then you're selling out of the money call spread. So in this case, the 150 call and the 150, and you're selling the 155 call, selling the 150 call, buying the 155. So I'm gonna go to the options chain, just kind of show you what that looks like. And it's almost like a straddle, right? It's a delta neutral. It should be basically delta neutral because you're not really trying to, the point is you're not trying to say, I want to take a long position, the stock's going up, or I'm going to take a short position. You're really looking at the range. You're trying to say it's going to stay in between a range. So here are all the legs, right? And I'm going to go here and load the strategy. So when you load the strategy, you could see here, right, that really you just want the stock to remain in this range. So your max range is right here in between the strikes, right? 148 to 150. So you want it to expire here. If it expires there, all the options, anywhere in between all the options expire worthless, and you keep that credit. So you keep a credit of $2.02. when the stock goes down, right, look in either direction, up or down, right? If it breaks out there, you know, you got the wings, so you stopped out to the upside. If you to the downside, you're stopped out also because you have the wings. So there's really not, it shouldn't have a delta, you know, because it's not a directional play like a call, right? Or even like a call spread will have a delta, because here's a delta, right? If I buy a call, I'm going to show you. I have a delta. The stock has to keep going, you know, going up, up, up. So this one has a 50 delta. So even if I sell a strike against it, the 155, right? So now I sold a strike against it. I'm going to load that strategy. So I still have a 40 delta, right? Positive delta because the stock needs to go up. So that's what the delta is. But the credit iron condor is not a directional play like a straddle. So really should not have a delta, you know, screening by delta wouldn't make sense to me. Does that help answer the question, Shan, or no? You're on mute.
Yeah, actually, when I choose the delta to pick up the strike price, basically I look at the 30 delta option or a 15 delta option on the both side, put and call side, to make a neutral iron condor with the probability of profit of around 70%. So that helps me to understand how, like, my trade probability of profit is how much when I'm taking a trade. So without the delta, it's difficult to pick up the strikes on both put side and call side. Like when in your screener, in the put screener, sorry, credit spread for the put and the credit spread for the call, you have the delta columns over here, but not in the iron condor. So when I'm trying to pick up, because I take the winning rate plus the theoretical edge, and I also try to see whether I am near about a 30% of probability when I take a trade. So with the three combination, I'm just trying to work out my, the trade.
So some of the things that I think I'm hearing is you're trying to use the delta to figure out the probability of what success or probability of profit, right? And this is why you're trying to look at it. Again, this is going to be yeah.
You just went underwater. You're gonna have to log out and log back in. I'll hold Shan on so you can answer him. Why don't you go out, come back in?
Okay. All right. Let me do that.
All right. Well, we need Shan. I think your mic may need to be improved. Unfortunately, it's probably your computer mic, and it was coming in pretty garbly as well. So hopefully D will get back to your question. I've got you on hold for his return. While we're doing that, a couple housekeeping notes. We have Raj coming on Tuesday with his monthly show, webinar with Raj, which should be good. Topic to be disclosed to me later today. Is that D's back? Nope, he's not back yet. For those who joined late, I saw Rob just came in. Remember, you can vote every day. Gene figured that out while looking at the Benzinga Awards. I did put the link into that. The voting takes place till October 22nd, I think it is. So maybe we can make a comeback. I think we're in third right now, third out of 8 research platforms. Mo, you're back.
Yep. Right. Wait, let me try to share my screen. 1 second. What's that? Okay. So so as far as the probability of profit, right? This here, the theoretical edge and win rate, this is looking at the probability of profit taking actual historical returns in this stock. Okay, so that's what this is. You could open it up and see. So it's looking at, in this case, Google, looking at similar circumstances historically and saying, based on history, right, how the stock moved, it's taken into consideration other things, like if there's an earnings or not in earnings, it will remove that data. We'll also look at where the implied vols are now, look at similar situations and say, based on those historical data, this is the probability of profit given, what the market is right now. When you're using delta, this is very important, because I think people are out there saying that the delta is the probability of profit and people are using that as a proxy. This is what I want you to do. Go the Black-Scholes model, the binomial model, it's public. Anybody could go, you could look at the formula. It's not the probability of profit. It's a risk factor. It's telling you how much your option is expected to move for a dollar change in the stock price, with all factors staying constant, meaning implied volatility is staying exactly the same. You're not going to have any decay, interest rates, dividends, all that staying constant. That's what your delta is. And it's important because if you're using the option pricing model, it's expecting you to hedge your delta. So you could read it, Black-Scholes model has been around since 1973. It's never been, this is your probability of profit. People kind of started using it as proxies and caught on, but that isn't what it is, and you could derive it yourself. You'll see, you can put it into an Excel spreadsheet and you'll start understanding it more. Okay. Here's what I mean. You're at the money options will always say you have a 50-50 chance of profiting, right? If you're buying a call or buying a put. You could keep increasing your implied volatility and you'll also get the same delta. And you'll get the same delta. You could increase the delta, you could increase your implied infinity to a gazillion, right? And your options will say they're all going to go to 50 delta. So it's a derived formula based on, if you're looking at this option right now, this option is implying how much, everything else being constant, that this option is going to change by this much based on a dollar move. That allows you to hedge that delta. It allows you to hedge that position. Okay. But I think the way you're thinking is, I'm going to use it as, this is my probability that I'm going to make a profit. That's not what the Black-Scholes model is saying. That's not how you use the Greeks, right? The Greeks, delta, gamma, theta, vega, rho, they're all meant for you to hedge and manage your options position. And it's important to do that because those are the assumptions for the option pricing model to work, right? It assumes, a normal distribution of returns. And the reason it assumes normal distribution of returns is that it thinks you're re-hedging your position every time you have a delta. And so it's part of the assumption, the normal distribution of returns is the assumption that you're hedging your deltas. And if you're not hedging your deltas, you're not even, the delta and the vega and the gamma don't really mean that much to you because you're not using the option pricing model the way it says it assumes you have to use it.
Yeah, I got your point, Dimitri, but that brings me to the next question. That in your platform, do you have some way to know or manage the portfolio? That, like, at the time I run 25 positions, and I would like to beta weighted, like delta, arrive at a beta weighted delta for all the positions equivalent to SPY, and then try to take a hedge on it. So is that something which is available, or because I'm pretty new, I just joined 1 day back and I was just trying to explore your platform. Couldn't find that feature. So is this something there, or would you be able to provide that in some foreseeable future or something?
Yeah. So I think the question is, well, can you enter in your portfolio to see your risk, like delta, gamma, theta?
Yeah.
Yeah, we don't
So
have.
only the data, but should I be able to beta weight against some benchmark like SPY, QQQ, or some other benchmark to see what is my net delta on my 25 or 30 positions which I'm carrying. So that, okay, am I sorry.
Oops. All right, that must have been the bell in the background.
That was
So
the
I
opening
think,
bell.
yeah. So really quickly, I think the question is, can I enter in my positions, my portfolio, and assess my risk?
Well, I think Shan has asked the last couple of days about the beta of his portfolio.
Or even the beta of the portfolio. So right now, no, there's no like portfolio. It's more of like a research platform. If you're like researching, different securities or finance or the risk of them individually, but not as your portfolio. But I did reach. One thing is, we talk to people, and I'm trying to see from interactive brokers if there's a way. I'll start with one broker. If there's a way for us to integrate through an API that you guys could connect to your brokerage, and we get somehow a drop copy of the trading activity and the positions. If we're able to do that, then maybe we would develop it. But from my experience, options, nobody's going to be sitting there entering things by hand all the time. You might do it one time, but it'll be a waste unless you could really just import it in there. So we're looking to see if we could integrate it with broker, if it's possible, what the regulatory stuff, is. But like right now, you can't do that right now.
All right. Well, we're 1 minute in the trading day, and maybe I'll put tomorrow we'll do a little poll to see how the chameleons would respond to the ability to do a download of their positions into the chameleon, so they could have their portfolio in the chameleon platform. But yeah. D, great job. Shan, thanks for the questions. If you have more questions, you can come on tomorrow. Very brave to ask live. D, great job as always.
Thanks, Shan. Did you have a last question? I don't know if he was trying to say
Shan, you're muted. Do you have one more thing you want to say, or Shan?
Thank you.
All right.
Okay.
Great.
Yeah. Thank you, Shan. Yeah. Really appreciate the question. That you're coming on the show, brave enough. So, hopefully it was helpful to everybody, and just want to say have a good trading day out there. Stay safe. Hope to see you guys on Monday. Have a good weekend.
Perfect. We did have a couple questions. One of a position in MOS the mayor put on. We can maybe discuss that on Monday. Maybe Shan comes back with more questions. And Mike from Tyler, Texas, D, was asking about new features. He wanted to know what you're working on in that head of yours. So those are some things we can maybe hit next week. Thanks so much, buddy.
Yeah. All right. Thanks, everyone.
Have a great weekend.